Most beginners look at a chart and ask, what's going to happen next? It's the wrong question. The better question is, what phase am I in right now? Because prices don't move uniformly. They don't drift in straight lines, they move in phases. Quiet stretches when not much is happening, and active stretches when the move is unmistakable. Once you can see those phases, every chart gets simpler. This video covers what each phase looks like, why they alternate, and how the same rhythm shows up on every time frame you look at. There are two phases a price can be in: every chart, every time frame, every time. The first is a quiet phase. Price moves in a narrow range. Day-to-day changes are small. The chart looks calm, tight, almost boring. On the chart, you see candles that overlap heavily, small bodies, highs and lows staying close to each other. The whole sequence fits inside a relatively thin band. The second is an active phase. Price moves directionally. Day-to-day changes are bigger. The chart looks purposeful, expansive. On the chart, you see candles stepping in one direction. Bodies are larger. Highs and lows keep making new highs or new lows. The band widens. Neither phase is random. Each one has a shape. Once you know the shape, you can name what you're looking at in a few seconds. Here's the pattern: phases alternate. Quiet, then active, then quiet again. The why is about agreement. When a price goes quiet, it's usually because buyers and sellers roughly agree on value. There's no urgency. Neither side pushes hard. But during a quiet phase, the agreement is fragile. Positions accumulate on both sides. People wait. The market is patient for now. Eventually, something breaks the agreement. A news event, an earnings number, a sector shift. One side gets more motivated than the other. The price moves. The active phase begins. And after the active phase runs its course, a new equilibrium forms. A new quiet phase begins. The rhythm restarts. Quiet and active don't run on a schedule. The quiet can last minutes or months. The active can last hours or weeks. What matters is the alternation, not the timing. Here's the part most new traders miss. This rhythm shows up on every time frame. Zoom out to a weekly chart. You see long quiet stretches, weeks of range-bound price, followed by multi-week active moves, then quiet again. Zoom to a daily chart. Same pattern, faster. Quiet stretches last days. Active moves last days to a couple of weeks. Zoom to a 5-minute chart inside a single trading day. Same pattern again. Quiet stretches last maybe an hour. Active moves last 15 minutes, 30 an hour. The chart is fractal. The same quiet to active rhythm plays out at every scale. A weekly quiet phase might contain several daily quiet to active cycles. Each daily cycle might contain a dozen intraday ones. Practically, the time frame you're looking at sets the cadence of the phases on it. A weekly chart's phases unfold over weeks. A 5-minute chart's phases unfold over minutes. The cadence is something the chart shows you, not something you need to forecast. Once you see phases, the question you ask about a chart changes. Before, what's the price going to do next? After, what phase am I looking at, and what comes after this phase usually? That's a different question, and it's one you can actually answer from the chart in front of you without needing a forecast. Phase awareness is the first frame every trader builds. Everything else, indicators, levels, setups, alerts, sits on top of it. Here's how this shows up in practice. Open a chart. First thing, identify the phase. Is this quiet or active? If active, which direction? Second, identify the context. Is the phase young, mature, or tired? Has it just started, or has it been running for a while? Third, read the rhythm. A quiet phase eventually gives way to an active phase. An active phase eventually slows. Reading where the chart sits in that rhythm is reading the chart, not predicting it. Every chart read sits on top of these three observations. Phase first. Context second. Where it sits in the rhythm third. The chart read is the platform's job. The trading decision is yours. So that's the frame. Prices move in phases. Quiet and active alternating. The rhythm is the same on every time frame. Only the cadence changes. In the next video, we'll look at how different trading styles, position, swing, day trade, each match a different phase horizon. How the phases you watch define the kind of trader you are. This is algorithmic analysis for educational purposes, not a recommendation to buy or sell any security.